Welcome, everybody. Today, we have another podcast with a global entrepreneur and investor that is also part of Go Global World community. And today, we would like to discuss an important topic that definitely might help many entrepreneurs in our community. And the topic is, what does an international VC look for when they invest in global startups? So here today with me, we have Oscar Ramos. Oscar is an interesting person that has international mindset. He's currently in China, and he has lots of experience investing in startups. In fact, Oscar invested in over 160 startups, on help to accelerate over 160 startups. And Oscar is an entrepreneur turned to investor. He is also partnered at SOSV, Manager Director at China Accelerator, partner at MOX. China Accelerator is a cross-border internet arm of venture capital fund SOSV, which is $1 billion fund, where Oscar invests broadly across enterprise SaaS and cross-border internet startups, manages the accelerator program, and serves as on the board of directors of several portfolio companies. So, Oscar, welcome to our community, welcome to our podcast. Please give a few words about yourself, about your fund, and let's get started.
Daniel, well, thank you very much to have me today, and great pleasure to hopefully be able to share some of my thoughts and build on the experience on both sides of the table. I mean, I'm an engineer that started my career in R&D, building like hardcore technology, churn entrepreneur. That because I wanted to build things that sometimes for large companies were not as attractive or interesting, or require a bit more agility on how to like launch new products to market. And then after having my own experience, kind of like move into the VC side of the equation to help others bringing their own products to market and hopefully make new mistakes, not the ones that I made in the past. No, and from that point of view, SOSV is a global VC fund where, as part of the DNA of the organization, is being very hands-on with the founders. We work very closely with the companies. That's where our startup development programs are designed to help founders take their company from where they are to the next level, working in a holistic way, thinking about technology, thinking about the product, the go-to-market, sales, fundraising, operations, and of course also the development of the founders themselves, who we believe are the core of the company. So from that point of view, I mean, I'm Spanish. Living in China now for 14 years, having worked with companies across all 5 continents, and experiencing a lot the realities of global fundraising, internationalization of early stage startups. So very open to share any thoughts and answer any of the doubts that some of the founders might have.
So you are Spanish in China. And you are on a global world community where we have founders from around the world. Like, you're in the right place and you are the right speaker to our audience. So getting deeper to the topic, but since you touched on your fund, can you give a little bit more clarity on the investment criteria of your fund, so those founders who are watching us, they have some understanding what you guys are looking for and what the criteria?
So SOSV is a global venture capital fund. We're originally we're actually like domiciled in the US, but we do really invest globally. The only criteria that we have for the companies that we invest in terms of geographical restrictions is that companies need to be part of need to be incorporated in a jurisdiction that is part of the World Trade Organization. But considering that, we invest domestically in multiple markets. Then sometimes the companies, they have to relocate because not all the follow-on VCs will feel very comfortable with that, but we're very global. We're also industry agnostic. We cover almost any industry. We don't invest in industries that are not positive for the world. So we avoid companies that are polluting or weapons or gambling, certain industries. But other than that, we're investing in anything from education to healthcare to food to logistics. We're very heavy in climate tech. We're very, very strong active investor in healthcare. Entertainment is something that in the right way could be very positive for the world, make people happy. So no restriction. And the way we structure ourselves is based on technology verticals. So we have a vertical that is focusing on hardware products, of another vertical focused on biotechnology, life sciences products, and then finally we have a vertical on digital products, software companies. Our approach is multi-stage, but we start investing with companies at an early stage, from a seed to pre-Series A companies. And the concept of seed or pre-Series A is very different in hardware, bio, or in digital companies. Normally in biotech, we work with companies that have a proof of science and they're building product. In the case of hardware, we work with companies that have a working prototype and they're getting ready for a go-to-market where licensing, certifications, industrialization is very important. And in the case of digital products, we work with companies that have early product market fit. That means that they have a product already in the market, they have some users, and in some cases they have some revenue. The truth is that a lot of these companies eventually we call it early product market fit because they have somebody that likes what they have, use it, and they pay for it. But there's a lot of situations where they have to pivot. They have to pivot, they have to change market, business model, etc. So in our investment approach, we start investing a small amount between 150 to 250K US dollars. But most of the companies that receive our investment, they don't come to us because they actually care about that initial injection of capital. They care about the support that we provide them that take them to the next level. And as we get them to the next level, it also that support also comes with additional investment that we can put into the company. So not only we work with the companies on helping them improve their operations and their performance, getting more customers and improve overall, and of course fundraising, we also continue backing the companies in follow-on rounds of funding.
Thank you for that. It's an interesting fund. I think it's a great opportunity for early stage entrepreneurs to check you out. And I also would like to say that Oscar is also an approved investor judge on our global pitch events. The program is pitch to global investors. And so those demo days that happened, Oscar might potentially attend as a confirmed investor judge, and I'm really excited to once you participate. Well, let's get to the topic. And the first question I have to you: how would getting an investment from international venture capital investor and local VCs make a difference to the growth of your startup?
Well, I'll say there's two angles. No, when as a company in one specific market you're receiving investment from somebody that comes from outside that market, there's some opportunities that come together with them. No? If you're thinking about international expansion, that becomes very natural. No, like, well, a global VC that has operations in other markets can help you expand to those markets, can help you connect you with a network, can bring some experience working with companies, can help you understand potential risks in terms of internationalization. And I think that's very obvious. No, that's something that is very tangible and that can be understood. What sometimes has been surprising for a lot of companies is when you bring in an international VC that has experience in markets that are to a certain degree pioneering markets where some business models with some best practices are being developed, you can actually bring in that expertise to your own market to help you get a competitive advantage. So in our case, for example, we're an American VC. We operate in multiple markets, but two of the areas where we're most active are the US, which globally is known as for several years has been known as a source of innovation and new business models, but we also have very strong presence in China. And China is slowly becoming also a very relevant innovation hub. There's already, especially in emerging markets, countless companies whose business model is actually more inspired by what is happening in China. So For example, we've seen investments in companies in South Asia and Southeast Asia, where the most relevant inspiration that really make a big difference for those companies was looking at Chinese companies, how consumer internet companies in China were working on their user onboarding, and that making a big difference. So looking into monetization, the whole concept of the whole infrastructure of payments and how the enterprise and B2B market developed in China is closer to how it developed in other emerging markets than the way it developed in the US, where you have a more sophisticated and a bit more mature ecosystem where more competition. So that is also something that can be very valuable. I mean, we've seen some of our portfolio companies, for example, in Africa, that working with them was for us super valuable for those companies, because some of the problems that they were facing, we've seen those programs, those challenges being faced here, and we were able to tell them, well, this is how the problem was solved. By the way, we don't know if it's exactly the way you have to solve it, but you have a head start and you have a different point of view. Also connected them with talent, with advisors that had experience solving these problems in the past, and they could use that initial know-how to give them a competitive advantage compared to others. No? So we've seen companies like having amazing growth and amazing change in what they were doing, improving their margins, introducing new monetization strategies, identifying who are the key people that they have to bring in their company, and detecting what were going to be the challenges and bottlenecks before they were even aware.
Yeah, and I totally support what you're saying, especially the one about experts or advisors that are bringing additional value to the founders at early stage, especially with international mindset. They can provide such a view when founders can't maybe see themselves, and with support of experienced entrepreneurs and venture investors, the founders can accelerate so fast. Well, and with that, we can discuss the different funding stages. So, how to determine which VC could support and provide more value to a startup at each time?
Well, I think that sometimes, especially in the early stage, entrepreneurs obviously they need resources, and sometimes most of the founders, when you ask them what do you need, they will tell you, well, I need capital. And that obviously, I mean, capital is one way to acquire the resources that you need for your company. But I think my suggestion for all the founders said, well, what will you do with that capital? What are the key things that will make a difference for your company? And when you talk with a potential investor, try to understand if they could potentially give you access to whatever you need. Sometimes it is about knowing people. Sometimes it's about having the experience, existing portfolio companies in that industry, and because that could make a big difference. A company with the right guidance and with the right access to those resources with less capital can achieve more than a company that has bigger amount of money but doesn't know exactly what they have to do, where they search for information. Because in the world of startups, speed and efficiency is important. If you go to your next, assuming that your company will need more rounds of funding to continue its development, if you go to the next round of funding and you're able to share with investors, with this amount of capital, I've been able to achieve this in this short amount of time, the next round investors are going to look at you as a more efficient company. So I think especially in early stage, you need to look at your investors as another partner in your company, as somebody that is going to be part of your organization that needs to be able to drive value and needs to be able to contribute to the success of the company.
Yeah, so it's pretty obvious to say that if you're looking for investments, first of all, go to the investors who invest in your industry, not just generally every investor, just because they call themselves investors. But from the other things you're saying, I think the the access to expertise of those investors and connections where they have. So it can help you expand your business. So this guidance and their connections, it's actually go beyond the money they provide. And I think this is a huge value where smart money, is a traditional word to say, come in and help startups. Well, what about some characteristic from investor standpoint, characteristic of a startup that will attract your attention to invest in them?
Well, I mean, for international investor, what you're looking for is any investor to a certain degree, it's always looking for a way to hedge risk. And a way to hedge risk is, well, if you have an insight that that allows you to make a better decision in terms of selecting a winner, you're gonna feel more comfortable because that's a way you can de-risk your investment. So if you know that a company is operating in one market and that market has some similarities with a market that you have more experience, you can come and contribute to that company, reduce the risk, improve the chance of success. If you know that company has a product that that has an opportunity in other markets because you're familiar with this other market, you know the demand, and to a certain degree there's a lack of supply for that demand in the market, that you can also reduce your risk. No? So as an investor, you're constantly looking for these opportunities that we sometimes call innovation arbitrage, where this is this supply and demand mismatch, where you can use your insight to identify that that opportunity. That is the high level, and that's the theoretical aspect. Then, where sometimes the decisions get stuck, and where sometimes international investors feel a bit more uncomfortable with these investments, is the fact that everything, I mean, these opportunities sound great in theory, but then when you gonna have to work together with a group of people, working together is always challenging. Between like investors and startups. Startups are the creative force that runs things with a lot of passion. Investors come with sometimes a bit more high level expertise, but we like the down to earth know-how that the startups have. And if you add on top of that cultural differences, language, different opinions, etc., that makes very different communication. So I mean, entrepreneurs that show their ability to communicate clearly, entrepreneurs that are transparent, that want to share, that are open for feedback, that are coachable, are normally something that international investors feel more comfortable, because the truth is that we are not in the market. We need to acknowledge sometimes our weakness in terms of lacking some cultural insights to be able to evaluate certain decisions. So the easier you make it for us to communicate with you, and that is not just about language skills. There's some other aspects, especially the transparency part is very important.
To me, entrepreneurship is how to make myself better, just because every time you're on the forefront, and if you're making a wrong decision, it's on you. You cannot hide it. You cannot like go around it. It's like either you're efficient or not, and you always develop yourself. And the business is always, or your customers are always showing you weaknesses, and you have to accept them. And
I mean, any startup is gonna make mistakes, or is gonna have projects and initiatives that it's not gonna work. That's a rule of thumb. Like if everything that you do as a startup is always working, you're either very lucky, or you are lying, or you are not aggressive enough in growth. So it's not that we like failure or we like mistakes, but we understand and we assume that those that are trying to achieve something new, those that are aggressive, and those that are trying to take things to the next level and expand their area of comfort, they will face situations where things sometimes they will not work. The important thing is, how do you deal with that? Do you hide it? Do you use it as a learning opportunity? Do you actually learn from that and when you try again, you use all the inputs and learnings that you had from that experience to improve the chance of success of the next attempt. That's what really matters.
Yeah. So from your standpoint as an international investor, how do you access and help startups who have the potential to go global?
Well, we are lucky to have a team that works with us and all the companies. We developed a systematic approach to work with our companies. So over the 11 years that we've been running these startup development programs, we have accumulated some experience on the processes and frameworks and the tools that work. So we bring in that systematic approach to work with companies so we can be as efficient as possible without compromising on the efficacy. Try to achieve results with the minimum resources and time allocation necessary. So that's kind of like or kind of like secret weapon. We've used that across like tens of different geographies, working in multiple industries, multiple technologies, very different types of teams. And there's a lot of things where there's a lot of situations where you don't have to reinvent the wheel. If you are working on the innovation space, every framework brings a system that is proven to work, and your role as an artist is not to create a new tool. It's to use the tool in the right way to create the magic and create the art. So that's kind of like one of the ways that we help the companies. We also leverage a lot our community. So I mean, we're lucky to have over 1,200 companies in our portfolio, and with this value of community and peer support and peer learning, we're able to also bring in those companies. So the companies that have already gone through this process, that have already experienced the transformation, they're able to share with the newcomer companies. Well, I did that 3 years ago. This is where I am. I did that 1 year ago. This is where I am. I did this three months ago, and this is where I am. And this updated information is very valuable for founders.
Yeah, I know you have some examples and case studies. So can you share what is the best time to consider expanding your startup business to other markets, and what are some of the best practices based on your real cases that potentially can share?
Well, I mean, international expansion for early stage companies is actually a very interesting topic for discussion, because to a certain degree, it's counterintuitive. No, like if you are working if you're launching a startup, you have limited resources. So the most natural decision will be, let's focus on your home market before you go anywhere. But well, what happens when the early adopters for your market are not in the place that you're based? What happens when the early adopters for your solution are not somebody that you can reach? In that case, you have to expand globally. What happens when you are working in a market that is relatively small, and too much focus on that specific market could potentially limit the opportunities of the company in terms of building a global product. So those are scenarios that that we've seen with companies that have to look at the early internationalization of the company as an initial opportunity for to be able to grow and take the company to the next level. But as a rule of thumb, normally before you scale anything, you first have to nail it. And the definition of nail it is well, can be very different depending on the market, but on the product. But you always need to make sure that you have something that is worth expanding, that is worth scaling, that is worth taking to other markets. And that might be something that is measured based on usage, or that's something that may be measured on positive unit economics. And so to make sure that when you grow the company, that company can grow to another to another market, another jurisdiction, another language, another channel, because internationalization sometimes is very subjective. When you're talking about a product in English that you made available online, I mean, you are already having customers in like tens of different countries without having to take any specific type of geographically focused approach to what you're doing.
Yeah, so if we do a step back and actually there are some real issues founders are facing daily when they meet investors. And a few problems actually draw my attention sometimes is that founders consider investors that investor equal to money, and is one of the problem. But the other problem is that sometimes investors are not relevant to the startups. What are the type of investors that might not be good for startups, in your opinion? And how
Well, obviously, this is like when you need resources to grow your company, you start with the ideal, and then obviously having investors that have experience in your industry, that have a very good network, they have a lot of know-how, and that can potentially follow on in your company. That's the ideal case. You get everything. You get the social capital, you get the smart capital, you get the actual capital, and then potentially even like additional capital in the future. That's the ideal case. And then if you cannot get that, you start removing some of the criteria that you have based on your own reality as an entrepreneur. So if you have a lot of know-how in the industry, maybe what you want is more connections. If you are a very well-connected person, or you have a number of advisors that can provide those connections, maybe you want somebody that has more insights in the industry. So you have to start removing what are your criteria. I'll say that there's two things that are critical that you always need to look for in an investor. The first thing is that investor needs to respect you. Sometimes in terms of entrepreneurship and innovation is a very complicated space, because the crazy and the brilliant are just like a number of millions of fundraising away, or sometimes just a go to market or a launch away. There's a lot of ideas that on paper we can justify them as crazy, that then eventually became extremely successful companies, because among other things, some of the ideas, the early product that they will launch and they will bring to market might not end up being the product that makes the company successful, but they are what we call an intermediate product to prove certain ideas. So you need to have somebody that respects you, that understands you, that wants to hear what you want to say. But at the same time, you want somebody that will challenge you. Because if you have an investor that will tell you always yes, 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 that is not respect. I mean, that's ruinous empathy. Like, you don't want somebody that will blindly support whatever you tell them. You want respect. It's coming because they feel comfortable asking you for explanations and making you think and making you grow as an entrepreneur and as a creator, to be able to see where might you have some gaps that you're missing. The next thing is well, some money can be very, very, very dangerous. I had experience on entrepreneur side, dealing as entrepreneur, dealing with gangster investors or people that doesn't actually understand how angel investment or private equity investment or venture capital works, where they have unrealistic expectations, and they can kill your company. They can kill your company because they might have expectations of return that are unrealistic. Like, everybody reads media and startup media where there's news about the amount of companies that, oh, in 2 years, this company became a unicorn, etc. Everybody talks about that. And those companies are real, but they're the exception. They don't represent the tens of thousands of startups that are launched every year, and they have to struggle to be able to get to success. And in some cases, the conversation about the early years are not discussed. So these type of investors that don't understand the risk and don't understand that the moment that they support your company, potentially they might be losing everything that they put, and they're not ready to accept that, are not investors that you want to have in your cap table. That doesn't mean that investors are not going to be pushing you and supporting you and committing. It's not that they don't care, but they need to accept that that's a reality of venture capital investment. Venture capital is it's about the venture, but there's an element of risk involved in them. So you definitely don't want to work with these two types of investors.
And with that, I encourage everyone to put us a like button and also subscribe to our channel and leave us comments. What do you think about what are the right investors for startups? You know, I totally agree with you about all this point, but the most important, even more important thing I heard about is that create your own checklist and go on this checklist. This is something I don't hear from many investors. And so when startup founders go approach investors, they actually can follow your advice on the checklist and not a gangster. Okay, check mark.
Well, is knowing that the investor understands venture capital, that the investor has made previous investments. So when I raised money for one of my first companies, I will convince some of the investors, some of the angel investors that were back in my company. And after I convince them, I try to convince them not to invest until they tell me, why are you trying to convince me not to invest? I already agreed that they wanted to put money in your company. I will tell them, well, this is risky. And I believe in this. I'm taking more risk than anyone else because, I mean, you're risking a bit of your capital, but I'm putting all my time and energy and my savings in this company. But I want you to understand that there's a risk involved. So if you are aware of the risk and you are okay with it, I'm happy to take your investment. But if it's not the case, I'll rather not take it because, I mean, if things don't go as expected, I don't want to have to deal also with the additional drama. But it is the checklist idea in terms of ranking is very important. But entrepreneurs also should do due diligence on the investors. So asking them, have you ever invested in a company? What is, I mean, we're talking earlier, no, about investors that sometimes they don't actually have any capital, or they don't deploy. They're just curious about things, or they're just fishing. Ask them. I mean, ask them what is the last investment that you made, and can eventually, I mean, you cannot do it at the beginning, but once you're moving forward in the process, the investors will do due diligence on you. You should also be able to do due diligence on the investors. And as the investor, can I talk with any of the founders of any of your portfolio companies? Do you sit in any board of any company? Have any of your companies raised follow-on funding? Like, getting this understanding with very tangible information is also a very important aspect of how to select proper investor.
And I would like to actually stop on this topic and discuss a little bit in better details, like due diligence of an investor. So we always hear due diligence of a startup, but due diligence of an investor, the basic steps you said, like ask your investor, ask about the past investments, the check, how often they do it. You may also speak with the fellow investors in their network. Maybe the startup portfolio companies also ask something. What are something else, or maybe the main steps you can recommend beyond what those we discussed that can help startups to figure out whether they have money to invest, whether they good invest? I mean, due diligence steps that you think most important for a startup, and maybe tools to investigate on an investor?
Well, I mean, there's the initial qualification process, like what industries, what type of check, what valuations do you feel comfortable, what jurisdictions that do you normally invest, and you want to check a bit of more on the activity. What are the latest investments that you made? Can you share any of the companies? Have they raised any follow-on funding? How did you get involved with this company? Those are like more on the activity. And then something that is very important sometimes, and I see few entrepreneurs asking is what is the process? Like what is, how do you make decisions? That's a perfectly legit question, and that could actually be very helpful in the process, because if an investor is going to take like 2 months to make a decision, or the investor is going to make a decision in 1 week, it's something that is very important. What are the materials that they're expecting, and you have to prepare? That's also something that can save some time from your side, or that can help you make a decision in terms of your willingness to work with an investor or not. So investors will ask companies to fill incredible amounts of data sets and information and data that goes nowhere. And some other investors would like to see some actual data that is very logical. No, I mean, I had entrepreneurs that told me, "Come on, for this investment, why do I need to share so much information?" It's like, well, if you don't want to share this information, probably we don't want to work together. But for me, I'm evaluating your company, and I'm also evaluating the opportunity to help you. So I need to understand how can I support you, because the ability to support you is the ability to help get your company to the next level, and that will give more value for my investment.
And this is where you identify how the conversation goes, how easy to partner with them, respect, and all this kind of chemistry stuff can be also taken into account, because if on personalities side they cannot work together, all the other questions might not be relevant.
Yeah, there's a lot of situations where sometimes a founder is explaining a company, and what we want to hear is we're not trying to understand the company, because we maybe already understand the company. You know, I look at hundreds of companies not every week, but every month definitely, and there's not that many companies. There's not many nuances of companies, but business models, most of the stuff that is out there, we've seen it multiple times. But we can see how the founders communicate. We can see how the founders prioritize one area or another one. No, if we ask a founder what are the most important things that you have here, what makes you different from someone else, we might have like 3-4 reasons why we think this startup is different from others. But we want to hear that from the founder. We want to hear from the founder, what is the single thing that, in your opinion, makes your company unique? And it's not just about us understanding. It's about us understanding what are your priorities.
All right, good point. Is this a question would you recommend to ask a startup to investor? Like what makes
they definitely that's something that they could potentially ask. No, that will drive a lot of the that will help you like understand better the investor and how they work. Then everybody, I mean, all the investors will say, well, we're not only capital, because capital is a commodity, but how do you deliver on that?
Yeah.
If you're going to be, if you claim that you're supporting and you're hands-on, how are you hands-on? How can you scale the hands-on support? How do you implement that? How do you deliver it? Can you give some examples of what you've been able to achieve for some of your portfolio companies?
Right. So I have a few situations before we wrap up. So situations from startup founders that probably happen to every startup. One situation is an investor and startup had a meeting, and by the end of the meeting, after the pitch, they don't have yes or no, and what startup should do, like how would they follow up on this to convert this into some other results, and what are those results can be beyond investment? Maybe unlikely they get investments in this situation, we don't know, but what follow-up or something should be, in your opinion?
So I don't think I understand the question.
So the situation is that when a startup pitched to investors, there were a meeting with them, and they don't get yes or no. It seemed like they were kind of interested. They didn't say they didn't like it. And what is the next step for the founder? So to get a result of this meeting, like, do they need to push like for the yes or no? Do they need to follow up? What would be the right set of actions to do to achieve a result and increase chances of funding?
Well, I mean, there's at least three situations that so when there's no answer from an investor, at least from my perspective or my own experience, there's three situations. The first one is like sometimes we're just really busy. There's the seasonality in what we're doing, and we have limited resources. We have a number of portfolio companies that we have to help out. So sometimes certain things take time, no? Especially when you're looking at companies in a new market or a new industry, or the information is not very clear. So trying to understand why the investor is not getting back to you can be very helpful. And there's a number of situations where the problem is we need time to process it. We need time to be able to make our own analysis. So if we need to run a more comprehensive competitive landscape, if you provide a competitive landscape analysis, we probably will need to do our own and complement the one that you share, but you give us a head start. That will help us make the decision faster and eliminate those gaps that we might have. There are situations where the information provided is just not very good, and it takes a lot of time for us because we have to continuously dig and try to get more information, etc. And I remember a case of a company that I spent like 4 hours talking with the founder, until he was able to give me a metric that was able to. So something was interesting in that company, but I couldn't figure out exactly. I need to have an objective criteria to be able to make that decision. And it took me 4 hours of conversation to get that number. And the problem was that the founder didn't know that number was very important. And that once we identified that number, that particular number that verified a specific differential factor in their company, that became the cornerstone of the sales pitch to customers. It was a B2B company, and became also one of the reasons why most of the investors found them exciting compared to everyone else. So not all investors will devote 4 hours to look into a company. Some of the investors will look at the company and say, nothing unique about this company, pass. That's not necessarily good. So inefficient communication is also a problem. No? Inefficient communication is investors are not clients. We don't know as much about the industry as your clients do, but we look for patterns. So like, I'm looking for value added differentiation is very critical. And then, well, there's investors that sometimes they don't want to say yes because they don't see the opportunity, but they don't want to say no because, well, you don't want to be the one passive. It's better if you miss the opportunity, but nobody wants to be the one saying no to a company that will eventually become like a unicorn or a massive success. So it's better I missed it because I was too slow, than to say I said no to the company.
Yeah, one of the tools to attract investors' attention afterwards, when you have some progress and traction, is to do this follow-up emails, like at least monthly follow-up email, and get their consent of receiving these emails. What would you include in these follow-up emails so they are informative and would attract your attention? So what would you like to see as an international investor?
Well, in general, I would like to see two things. The first one is metrics, is numbers. The email updates that are very qualitative are not as credible, or not, they don't communicate as much the diligence of the funder that when you have metrics and when you have numbers. Those are really, really good, and that makes that creates a very good impression. But additionally, what you want is, you don't want just the numbers, you want the interpretation of the numbers from the company. So you want to know, okay, I look at those numbers and this is my analysis. This is what I learned from those numbers. Okay, so that analysis is very important, and that analysis needs to be open and sincere. You need to be able to say, this is going great, we like it, so we're going to double down on this, or this is not going as smooth as expected, so we're going to take some action to change it. And that's the third thing that you want. You want to see commitment to action. You want to see reaction. So in a startup, you're not expecting everything to be perfect. You're not expecting everything to be like smooth and amazing. If you're not having problems as a startup, you're either lying or you're not aware that you have them. But every startup always has challenges, because that's the nature of a startup. It's an unstable organization that is in constant search and evolution, and going through tension. So what you're expecting is at least, well, you find them, you track them, you find them, you take action. That's what you're expecting in an email update.
And I have two final questions before we wrap this up. About cold emailing. So in most situations, there are plenty of startups at early stage, and they first-time founders. They don't have a good network of investors and maybe experience of fundraising and contacting investors. What would be the right cold email when they contacting, or maybe cold message when they contacting an investor, and what are the tools would you recommend to use to get those cold contacts or find investors?
Personally, I mean, I think cold emailing is not a good approach to reach out to investors, especially for early stage funders. If you don't have the network, most likely you also don't have the communication skills to reach out to investors. So what you might end up doing is actually burning your reputation. And I mean, this is something that we see all the time, particularly when you see entrepreneurs that reach out to everybody in a firm, will just blacklist them as somebody that is uncoachable, is unable to find somebody to help them, and is maybe desperate. So that's not a good approach to reach out to people. It's good to reach out to people for advice, but when you reach out to people for advice, you want to see relevancy. So if I have no experience in healthcare and you reach out for advice in your healthcare startup, that looks bad, because you're not doing your research. So why should I spend any of my time looking at what you're doing? So first thing is, try to, if you don't have the network, there's organizations like Go Global, like a Startup Grind, like a multiple organizations, Founder Institute. There's a lot of organizations that are very open, and they help funders. They help funders work with their communication. They help funders reach out to early stage investors or networks of people that will be potentially helpful. So that would be my advice. And some of these organizations, I mean, they don't charge, they're non-for-profit organizations, they don't charge any equity. Sometimes they might charge something just to make sure that you're committed to it, because commitment is important. And well, when you have to put something from your side, you tend to be a bit more committed to participate in these organizations. That's in my opinion the best way. Try to find within your network. I mean, if you went to school anywhere, could be high school or college, whatever, just connect with the people that went to your school and try to find somebody that can be a door to someone in the ecosystem. And also, like, be part of the ecosystem, join events, ask questions when you join events, participate, and start building that network, because social capital is important.
Totally agree with you. It sounds like what we do at our global community. And I agree that plenty of organizations, communities, online communities, they help a lot, just because this is the power of the network. One person comes and bring lots of connections with him that they can reach. The other comes and all of a sudden 100 people came, but they already can reach at least 150 connections in their network. And so multiplying this by hundreds, it's already many thousands of people you can reach with a one handshake. And yeah, so as our organizations, there are plenty of other organizations that are totally free in terms of building the network. When you truly want to help startups or you have some expertise connection, just come and give this to others. And this is you will get back from the industry. You gain your social capital, as you say, but at the same time, you'll gain your first reputation in front of the quality network that can help you to build your company, maybe fund your company, or open you some doors. Well, thank you so much, Oscar. I appreciate you for this great talk and sharing your personal opinion on how to get attention to international venture investors and give some tools and practices. I think we achieved the result we wanted, and I hope startups will be able to apply. I still remember this checklist thing and follow-up email and many other practices you shared. Well, we look forward to working with you more. We look forward to have you on our pitch events. And at the same time, everyone, don't forget to press the like button, subscribe to the channel, share your opinion and questions in the comments below. And everyone, just don't forget to register to the event we will have with Oscar soon. This we will publish on our website, so you'll be able to register. And if you find this video, our talk valuable for you, please share it on your social media so we can help more entrepreneurs, because this is a free talk and this is where we truly want to help your business to grow. Thank you, Oscar. Do you have any final words to say? And we are letting you go.
Well, all good here. Thank you very much, Daniel, for the invitation and Go Global for this opportunity to share with the Strike community. And just a thought for funders. No, I mean, just remember that building a company is not fundraising, but fundraising, especially in early stage, is really about looking about another partner for your company. So you need to be smart in the selection. You need to be diligent, and just make sure that you find someone that you want to work with, and somebody that you can trust, and that can support you and complement the weaknesses that your funding team might have.
And that was Oscar Ramos from SOSV, MOX, and China Accelerator. Thank you, Oscar, and see you soon.
Talk soon.
Bye.